Hello, Oracles. Welcome to another week of trading. We've got some great news about a confirmed contract that Tesla has signed for some key battery component materials. And we also have some ideas that I have come up with for how this year is going to play out and how I can maximize my gains and be able to add even more Tesla stock by the end of the year. So we will get into all of that in just a minute. So jumping into the charts, pre-market, we are down a little over 1%. The entire market is down. NASDAQ is down about 1.1%. So it looks like we're starting to see a little bit of a sell-off. Might be a realization as to what the Fed is going to be doing. We're going to get into that in a minute. Some ideas from Open Skies as to what we might see for rate hikes coming this year. That's going to be playing into what my plan is going to be able to accumulate even more shares of Tesla. Now, by the time you guys see this, the market will be open. So we will see how the market trades today. I will be doing a live stream tonight to be able to share with you guys what we went over today. And all in all, it looks like we are starting to consolidate in this area. Again, we had this cup and handle pattern. Last time we saw this, we did break down. It was last September. So whether we see it break down or break out or not, I'm not sure. Again, there's a lot of uncertainty in the market. And then we do have Investor Day coming next week. So tomorrow we will be having on Farzad and Peggy. We will be discussing Investor Day amongst many other things having to do with Tesla and try to figure out what is going to happen for the near term for Tesla. But honestly, long term, my thesis has not changed. Very excited about this. That's why I want to accumulate as many shares as possible. And so Open Skies here shares out inflation data came in above expectations, 6.4% year over year CPI versus 6.2% consensus. The market now pricing three more 25 basis point hikes. Current market expectations for Fed fund rates March 22nd, which is the next FOMC meeting, will be a 25 basis point hike, which takes us to 4.75 to 5.0%. Now, we have to remember that the Fed did tell us that they were looking to get us to that 5.0 to 5.25%, and they will be reevaluating that average coming this March meeting. So on May 3rd, the market is pricing in another 25 basis point hike, which will take us to that 5.0 to 5.25%. Then on June 14th, we will see another 25 basis point hike, taking us to 5.25 to 5.5%, and then a pause after that. And so my thoughts on this were I thought we might see a 50 basis point hike in March and then a pause, but it does kind of make sense to kind of trickle it down. We've been coming down, tapering down slowly, allowing the Fed to see how their previous rate hikes are affecting the economy. They did raise rates faster than they ever have in history in this past year, so it would be very good for them to just wait it out and see how it's going to affect the entire market and the economy. Now, we did see those revisions from last year showing that the inflation didn't come down as much as we thought it did. And then the month over month data coming in most recently definitely showed us that disinflation is not actually here yet. And with those numbers, I did have a feeling that come this March meeting, they will have an average coming out saying that they want to get to that 5.25 to 5.5% rate. This all plays out. This is how it's going to be looking. And so when it comes into all of that, my plan and strategy for the year is going to be the same as it was before. My goal is to get to 200 shares by the end of the year. And the only way I can accumulate that many is by either having more money coming in or having the stock price drop down. So obviously, nobody wants to see the stock price drop down unless they are prepared for it to be able to buy more. I am one of those people. So yes, I see the stock doing extremely well long term. We're going to get into some of that in a minute as to why. And any pullbacks that we get due to the economy are going to be massive buying opportunities for me and allow me to get myself to that 200 share count by the end of the year. So, with that said, with the Fed rates going up as they are, this morning I just rolled over two more CDs. These CDs matured last Friday, and I will be rolling them in today into another 1 month CD. So they are each $5,000 and they will be going in for 1 month for 4.3%. This here is allowing me to do a 1 month rollover. So as the Fed does raise rates, those rates do go up. When I started doing this back at the end of November, the rates were around 3.7 to 3.8%. They continue to go up. Sure, there are some stocks out there in the market. You can argue that if I bought Tesla at the beginning of January and then saw it now, we were up over 100%. That's a significantly better gain than 4.3%. True, but that's also timing the market. And that would have also required me to sell my stock and then try to buy in later if I was going to think that we were going to get that pullback. I do think we're going to get that pullback, but nobody knows what's going to happen in the market. I don't want to take that chance. I will just continue to dollar cost average. And in turn, I will find my gains elsewhere and use that cash that I make from those gains to buy even more stock. Now, thinking about how the timing is going to play out for this year based upon what I think is going to happen, the Fed is going to continue raising rates. As they continue raising rates, the market is going to continue to pull back. We still have yet to see a massive pullback reaction. I mean, we saw that at the end of last year, but then we had this massive run, which kind of negated where we were at before. So some can argue that maybe we had pulled down that far and it was an over exaggeration, and we're now back at the levels we should have been. Others say that we still have a massive pullback still yet to go. We still have the housing market that needs to come down significantly. And in turn, we may end up seeing recessionary pressures. This could put some pressures on some earnings for stocks. This could also mean that we see the economy pull back and in turn, the stock market pull back. So, based upon that information, I do think we are going to be getting a significant pullback. I have a 10% chance that we are going to see the stock pull back down to the $57 gap. I do still have that on my radar as a very small percentage. I have a 20% chance that we are going to pull down to $100 and a 30% chance that we are going to come down and fill that gap at 114. So, timing wise, if all of this is going to happen, it most likely won't happen until we get that pause. As the rates continue to go up, the market will continue to pull down. That's just my take on it, and I can be completely wrong, and none of this is financial advice. So, with that said, though, my plan currently, and I still will be agile, and if things change, I will change and I'll keep you guys posted. But based upon the information we have now, as the Fed goes up with rates, I will continue to roll over my CDs and continue to make those profits on those CDs. As that happens, I'm anticipating we will get that market pullback. When we get that market pullback, I will take all of those extra gains that I made from my CDs and be able to roll those over into Tesla stock at a lower price, therefore giving me a much larger cash pile to be able to invest in Tesla at a lower price to be able to get more shares and get me closer to that 200 share goal that I have for the end of the year. So that is my current strategy. And again, I can be entirely wrong with how this is going to play out, but keeping those CDs rolling over month to month allows me to be agile. So, for instance, if the Fed pauses sooner or if things change, I will have access to that money sooner to be able to buy back into the stock in case we don't see any chance of that pullback coming. Again, just being agile, I am preparing for the worst and hoping for the best, but I still dollar cost average every single day, which means that I am going to win on both sides of this coin. And so, with all of that near term plan said, I am still looking long term for the stock, which is why I want to accumulate as many shares as possible. So we did get in the made in China insured vehicles from Moneyball for last week, and we saw 5,913 vehicles getting insured. So last week before that, we saw 6,900. And now, from my recollection, and correct me if I'm wrong, usually this past week that we see is the last week we see for a lot of exports going out. So Shanghai now should start focusing more heavily on all the domestic deliveries going on. So these numbers should start going up, and we will just have to track and wait to see. So I know Karav will jump in here and give us some information on that. And speaking of Karav, congratulations on 1,000 followers. If you guys do not follow him, please do. He is a wealth of information, young kid, brilliant, definitely worth following over on Twitter if you guys are over there. And so we're going to break down a little thread that he made about the inventory over in Europe. So Tesla inventory Europe. In the US, it is known that one inventory listing is actually multiple cars. This means the actual inventory is much higher than the amount of listings. We know this because you cannot find an identical vehicle at the same location. However, I've noticed that unlike US inventory, in Europe, you can find duplicate configuration at the same location. This means the actual inventory amount is actually fairly similar to the amount of listings online. Below is an example. There are two separate Model Y listings that are available in Scotland. Both are identical and available at the same location. And so while the demand issues aren't nearly as hot as they were previously, there are still these questions to make sure that, are these inventory numbers going down? Is Tesla moving all the vehicles that they are producing? We are seeing price adjustments coming both here in the US and over in China. Haven't seen too many more over in Europe recently, but this is Tesla just kind of playing around with their pricing power to get these vehicles moved from inventory. Now, obviously, as Giga Berlin begins to ramp up, they will have more luxury of pricing power because they won't have as many exports coming in from Shanghai. And the last thing to go over is what we were talking about at the beginning of the show. Sawyer Merritt tweeting out, breaking, Magnus Energy directly reached out to me and confirmed they have signed an off-take deal with Tesla to supply a minimum of 17,500 tons per annum of active anode battery material beginning in February 2025 for a minimum term of 3 years at a fixed price. And here is that agreement down here. And it does say the agreement contains a customer option to increase up to 35,000 tons per annum. Also noted, Magnus to commence large-scale pilot plant development for both AAM and Nachu graphite concentrate immediately. And so why this is important is because this is going to play into Master Plan Part 3, scaling to extreme size. So looking at the fact that Tesla is coming out here looking to lock up all of these supply chains. So that's 2025 through 2028. They have now locked up this agreement and all of the pricing for it. And so with that said, now looking at where they're going, we've heard the rumors about the buyout of potentially getting Sigma Lithium. We already know that they are doing their own lithium refining. So Tesla is securing all of these materials. This is something we saw during the COVID pandemic when we had a lot of legacy auto struggling with supply chain issues. Meanwhile, Tesla did not have the same issues. Now, granted, they weren't pumping out as many total overall vehicles as legacy auto was, but because Tesla had these long-standing contracts and the foresight to have these things in place, they didn't know the pandemic was coming, but they had all of the supplies locked up that they needed. So that means they got priority for all of this stuff ahead of time. Now we've got them doing this continuing going forward. So 2025 to 2028, they have locked up even more. They continue to lock up these long-term down the road contracts that are going to help them supply all the vehicles they need. This is the foresight they have. This is why I am so bullish on the company long term, because they have that foresight to be ready and planned for all of this stuff down the road. So regardless of what happens when it comes to competition, Tesla doesn't have to worry about the supplies. They're already ahead of the competition when it comes to getting the supplies they need. So even if Legacy Auto gets to that point and they want to get all of these vehicles made, will they have the supplies for it? We don't know. We don't know if they have all of these contracts set up themselves, but Tesla has been doing this for well over a decade now. They have great relationships with these companies and they continue to build new relationships or just do it themselves. Tesla is prepared to grow to mass scale in the future. And it's extremely exciting to see this. And now we're seeing all these contracts coming into place to show that they are ready for it. So let me know your thoughts in the comments below. What are your strategies for this year to be able to accumulate as many shares as possible? There's lots of different ways to do it out there. I just shared with you guys what mine is. Maybe if you guys have a different or better idea, you can share it in the comments below, and it's something we can all take a look at. Now, I did want to share one last thing. Over on Patreon, I am doing a lot more stuff over there now. It's kind of going to be more like my blog and vlog, and I'm doing a lot of the health and fitness stuff. I'm doing finance. I'm kind of trying to branch out and share a lot of the different things that I have done from my experience, and I aspire to inspire. And so I want to inspire all of you and give you guys some tips on things when it comes to a lot of different things. It's tough with here on YouTube. The algorithm doesn't allow me to do that here because it totally screws everything all up. But if you guys want to have any access to that over on Patreon, I am sharing a lot more information with my health, with wealth, different ways to invest, a lot of different things that I'm doing. And the stuff like the CD move that I'm making today, I share that over there immediately as soon as I do it. So I'm giving all that information there in case you guys are interested. That is available over there as well. Otherwise, I will share it here on these videos in due time also. Thank you all so much for watching. I appreciate all of your support. If you have not hit that like and subscribe button, please do so down below, and we will see you in the next one.